Hey guys, and welcome back to the channel. If this is your first time with us, my name is Alex. I'm that Hawaiian guy right here in Canada trying to help you new investors build a stronger and safer portfolio. Here we like to talk about all things regarding finance. I also give you my 5 best stock picks for the week. Typically those stock picks are non-cyclical type stocks that do really great during corrections of the market, as well as stocks that do really great during a booming economy. I also like to answer any questions you folks might send in, particularly one question I've been seeing quite often, which is, hey Alex, how do I get $1,000 of passive income quickly? Or how do I change $1,000 into $100,000 within 1 year? If this sounds like something you're interested in listening to, do me a favor, stick around for the video, hit the subscribe button, hit the like button, become part of my Hawaiian family, and let's get into today's video. Alright guys, let's jump right into it. Before I talk about my stock picks for the week, I want to talk about the question that I keep seeing quite often in the comment section, which is, how do I get $1,000 of passive income in my account within 1 year? Or how do I change $1,000 into $100,000 within 1 year? And the answer to that question is, I don't know. And anybody out there who's telling you they do know how to do it, they're just charlatans. They're out there, they're just trying to, they're the 18th century, 19th century medicine man trying to sell you this fake crap. Guys, there is no easy way to make money. Unless you're gonna go to the ponies or play the lottery or bet something, you're not gonna turn $1,000 into $100,000 within 1 year. And anybody out there who's telling you, oh, follow this system, buy my book, take this program, you can make $100,000 within 1 year, that's crap. There's one way to make money in the stock market, and that's by being diligent, by saving your money, by not buying things that you don't need, those impulse type shoppings. The only way to build a strong, safe financial future is to save. That's the only way to do it. Don't believe these guys who are telling you you're gonna make $100,000 within 6 months if you follow my program. Unless you're out there selling something you shouldn't be selling, there's no way to make money that fast. Be patient, guys. Your time will come. There's this wonderful, beautiful, amazing things that have fallen down from the heavens called compound interest. And I wish I would have knew this when I was maybe 17 or 18, because I would be a millionaire now, that if you just invested even a little bit of money in your early 20s will make a huge difference with that compound interest over the next 20 to 30 years. You want to know how to get passive income? You want to know how to get a fat bank account? Start saving your money and start investing in great companies at a fair price and not these crappy companies at a great price, because you're looking at it the wrong direction, okay? Look for the company, what that company have to offer, and then check to see if that company is being sold at a fair price. That's how you choose stocks. Okay guys, our first stock pick for today is O'Shares Global Internet Giants ETF. Ticker is OGIG. This is a really great company at a really fair price. Right now they're trading about $55.68 prior to making this video. And the reason I really like OGIG is because if you've been watching my videos for a while, you know that before I did invest in companies like Alibaba and Tencents. And if you're not familiar with those particular companies, they're Chinese-based companies. If you're not familiar with Alibaba, just think of Amazon, but for China. But when you think about it, China has, what, 1.6, 1.7 billion people, versus the US have about 360 million. And then in Canada, maybe about 300 or about 37 million. So if you took Canada and America and you put them together, you're only looking at about 390 to 400 million people, versus China has about 1.6 to 1.7 billion people. So Alibaba is one of those phenomenal companies, and I did past tense, I did own shares in Alibaba, as well as the other company, which is Tencents. And if you're not familiar with Tencents, this is the juggernaut of companies in China. They do a lot of video games, mobile video games, entertainment. They're into to artificial intelligence, AI. These guys are there are the Apple, the Microsoft, the Google, just all crammed into one, Tencent's holding. The reason I pulled out of those companies is because the current climate in China, good or bad, I'm not saying you should take all your money out of China. It's just things are getting a little bit dicey right now, and I didn't feel too confident holding shares in that particular company. So this company I'm telling you about right now, OGIG, the really great thing is you're buying an ETF and you're buying at smaller amounts. So I think Alibaba is trading at maybe $300 or $400, and then Tencents was, I want to say $500 or $600. So maybe you don't want to put $500 or $600 into a company you're not really sure about, but I think it has great potential to really take off in the future. So OGIG, the great thing about these guys is you can actually get a little piece of the pie without actually spending too much money. Again, they're trading about $55.68, but the companies within this ETF, you have Alibaba, we just talked about them. You also have Amazon. So the great thing is you have the two juggernauts kind of going against each other. You got Alibaba, which is Asia, China particularly, and you got Amazon, which is the world. So you're getting the best of both worlds. You're kind of drinking your Pepsi and your Coke too, and you're like, I can't even taste the difference. So you get a little bit of Alibaba, you get a little bit of Amazon, you get Tencents Holding, phenomenal company. Some of you might love to play like Fortnite, Call of Duty. I got mad Call of Duty skills. Tencents, they have many other titles on top of that, but Tencents Holding actually produces those games and many other games. But you have Tencents, you have Google, you have Facebook, you got Microsoft, Zoom, Spotify. This is just the best internet digital companies in the world, all crammed into this ETF, trading again about $55, and you don't have to take those huge risks of maybe putting $500 or $600 in Tencents or another $500 or $600 into Alibaba, where you're not really sure where the market is going to go with China right now. But you can kind of hedge your bets because you're getting a little piece of the action at a little bit less than the price. So again, this particular company, O'Shares Global Internet Giants ETF, trading at $55.68. Again, that price is prior to making this video. It's a great company to perhaps keep you on your radar. I am not by any means telling you to go out and buy this company. I'm just saying this is a company that you might want to take a look at. All right, my number 2 stock. Actually, I've had shares in this company for, I want to say, since about 2016, 2017. And back in 2019, because of new technology or new innovation that they were coming up with, I bought a little bit heavier back in, I would say, late part of 2018, early 2019. And the reason that I'm really happy with the purchase that I made about 2 or 3 years ago is because, well, let me tell you the company first. The company I'm talking about is FedEx, ticker FDX, trading about $284.21 prior to making this video. Now, a really great thing about FedEx, particularly in the climate right now, is they're delivering a lot of the vaccines that are going around the world. These guys are making a lot of money for delivering medicines around the world. This is not something that's going to stop in the near future. I mean, even once this pandemic is over, I think you're still going to have to get, it's going to be almost like the flu. You're going to have to get your booster shots, or, I mean, I'm not a medical physician or epidemiologist, but I don't think that just because the pandemic ends after everyone's been vaccinated, that all of a sudden in 2022 that FedEx will not be delivering some type of pharmaceutical need around the world. That's the first reason I really like FedEx. The second reason is back in 2019, mid 2019, FedEx jumped on a bandwagon to actually get drone deliveries, which you guys know I love when companies innovate. And this is another way where these guys, it hasn't happened yet, but they're actually kind of got the motors running back in 2019 to kind of set up so these drones will actually deliver small packages to your home. That's a game changer. Right now, again, they're trading about $280, but I really see great potential from FedEx. It's one of the largest shipping companies in the world. You're always going to need, especially when you think about the e-commerce industry, everyone is sending packages from here to there to here to there. Delivery companies like this, I don't see them going anywhere anytime soon. And FedEx is a great name, a great brand, definitely one you might want to keep on your radar. My number 3 stock, a lot of you guys might be a little surprised, and typically I don't really go for automakers. They tend to stay quite stagnant over a long period of time. But the reason that I bought into this company last year is because one of the things I always look for in a company, I look at the who the CEO is, who's operating the ship, what their financials are looking like, what their debt to ratio income is looking like. But the number one thing I like to look for is what type of innovations they have coming on the horizon. If you get in those companies that are just stagnant, they have the money coming in, they have the money coming in, they're paying you really great dividends, but they don't really have any innovations coming on the horizon, I tend to stay away from those companies. Now, the reason that I really love GM, I'm going to give you 3 reasons. Number 1 reason, GM and Microsoft has tag teamed together. They have this collaboration going on right now where they're going to build the first driverless, available to the public vehicle called the Cruise. Check this vehicle out.
Exclusive look at the new autonomous vehicle from Cruise. They call it the Origin. It really didn't look like any car I've ever seen before. And that's really kind of the first impression you get as soon as you approach this vehicle. The outside of it has the same dimensions as a normal crossover SUV, but that's really kind of where the similarities end. So when you want to get into the vehicle, you first have to put in a code on its keypad that's on the door on the outside, and it sort of opens as if like it's a minivan that opens from both sides. You get in, and you have a very spacious interior of the vehicle, and that's obvious because there's no steering wheel, there's no pedals, there's no gear shaft, there's not even really a dashboard or any infotainment system. There's just 2 bench seats facing each other in this sort of vast space in between them.
It's designed to be comfortable if it's shared, but if it's just you, you got so much space in here, you can really like stretch out, and it's pretty great.
Now think about this. This is going to replace taxi cabs, your Ubers, transportation to the airport. If you're in New York or Toronto, wherever you are, in London, wherever you are in the world, you're going to be able to, on your app, just like an Uber or whatever, just put in your credit card or however they're going to do the payment system. I'm not sure yet. Have a vehicle come to your house, driverless vehicle, take you anywhere you want to go. Or actually, they're getting to the point where your vehicle will be driverless. So say you're hanging out with the boys, doing a little 12-ounce curling. That means drinking beer. You don't have to worry about getting a DUI. You could just, be butt drunk, hop in the back seat and let your car drive home. This is the direction that GM and Microsoft are going towards. Amazing technology. Right now, you're getting it at a great price. Again, $58.49. GM is a great company to keep on your radar. Number 2 reason, I've never been a huge fan of the Hummer because it's a huge gas guzzling tank, but it looks cool. But now GM is coming out with the EV Hummer. All right, if those 2 things didn't get you, the driverless car with Microsoft and GM kind of partnered up, or if the Hummer didn't get you, then how about GM is a dividend paying fund, paying about 2.77 yield, or equivalent to about maybe $1.30, $1.35 per share annually. GM right now, I kind of see it as maybe the future Tesla, where it's just going to shoot through the roof later. I mean, they got the innovation, they got the AI type of vehicle, they have the EV vehicle cover, and again, they're a dividend. That's a hat trick right there. To all my Canadian viewers out there, you know what that means. But I mean, this is a great company to keep on your radar. All right, my number 4 company. Typically, if you watch my channel for a while, I tend to stay away from mining and energy type stocks. I stay a little bit more towards IT. I've been pulling back quite a bit in real estate or REITs type investments. I'm not feeling the brick and mortar stores right now. I think a lot more is going towards the e-commerce, which is why I'm more heavy in IT, quite a bit in consumer goods. I'm not really big in mining. I'm not really big into oil and gas. The company I'm talking about is Chevron. And the reason that I actually purchased Chevron, they actually bought out Exxon not too long ago. And right now they're the largest oil producing company in the United States. I really do want to see a world where every vehicle on the street is an EV vehicle, and we are not using this combustion type engine just polluting the planet. I really don't want to see that. But I don't think that the majority of the vehicles in my lifetime will actually be rolling on a roadway where you see 50 or 60% of the vehicles on the roadway as EV vehicles. Perhaps around maybe 2040, 2050, you might be going a little bit more towards that direction. But for me, being in my 40s, investing 100% in EV might not be the best option for me. I am still going to invest a little bit in oil and gas. All right, my number 5 stock. One other sector that I do recently in the last maybe 2 or 3 years, I'm kind of buying a little bit more heavy in is the healthcare. And one stock that I haven't purchased this one yet, but I was thinking about it perhaps this week. And this company I'm talking about is DaVita Healthcare, ticker DVA. When I checked this morning, it was selling, I think, about $110.78. So trading about $110.78. I know a lot of you guys are probably not familiar with this particular company, but to give you a little bit background information right now, these guys are sporting a Zagat ranking of about 2, which is definitely a strong buy, and they have a value grade of A. I know that might not be telling you much about this company, so let's dig a little bit deeper. Particularly what this company looks at are individuals with chronic kidney failures. Now, this stock is not as pretty as the other stocks, looking at the EVs and the Hummers and all the great technology with the other companies I talked about, but healthcare is something that we need, that is not going away, and this is a company that has their reach going far. And what I mean by that is they're actually expanding into Brazil, China, Colombia, Germany, India, Malaysia, Netherlands, Poland, Portugal, Saudi Arabia. There's many I can't say in one breath, but this is one of those healthcare companies, again, mainly kind of providing kind of a dialysis type service for individuals who are suffering from like kidney failure. It's not pretty, it's not those shiny kind of stocks that a lot of individuals are looking for, but this is definitely a company you might want to keep on your radar. Again, folks, I am not a financial advisor, nor do I have fiduciary credentials. I'm just an individual on YouTube that is researching information. Information is readily available to you as well, and I'm just relaying that information to you. I do a lot of background information on the stocks that I talk about, but the information I'm giving you is information for food for thought. Before you invest your hard-earned money, do me a favor. Research these companies, make sure they're right for you, make sure this is the particular sector that you want to buy into. Because remember, when you're buying a stock, you're actually becoming a part owner into a company. You're not just buying this non-tangible type of item, you're actually becoming a partner in a company. I hope this information helped you. I hope these particular stocks are stocks that might interest you. If you have any stocks that maybe I should keep on my radar, again, guys, hit me up. I want to hear about what you guys have to do. I'm not the end all and know all. I don't know everything about the stock market. I don't even know that much. I know my niche. I know what I like, and that's what I relate to you. All right, guys, until I see you next time, aloha.